All right, crypto fam, Fed meeting just dropped. Twitter screamed, charts spiked, and then Bitcoin said, nah, I'm good. December 2025. FOMC gave us a 25 basis point rate cut, and yet BTC didn't moon, didn't gigapump, didn't even do a polite follow-through. So today we're answering one question: why didn't Bitcoin pump, and what actually matters next? Not financial advice, macro education plus entertainment. Let's decode the Fed like adults, but fun adults. Here's the headline: 25 BPS rate cut, rates now at 3.50%, 3.75%. Sounds bullish, right? Wrong, because this was the third rate cut of 225, and everyone already expected it. Bitcoin before FOMC, Xiao 90K. Quick spike, 94K. After Powell finished talking, back to 90K. Classic, buy the rumor, sell the nothing. The market basically shrugged and said, cool story, Jerome, we knew. Let's talk expectations. Johnny Ice. Because markets trade expectations, not news. Before the meeting, CME FedWatch, my seen 90% probability of a cut. So when the cut happened, traders weren't surprised. And when there's no surprise, there's no fuel. Bitcoin only really rips when the Fed does something unexpectedly dovish, not when they check a box everyone already priced in. This FOMC was like ordering pizza and receiving the exact pizza you ordered. No excitement. This is the real reason BTC didn't go parabolic. The Fed did not commit to ongoing easing. Next meeting, probabilities. 80% chance of no cut. Only 20% chance of another 25 BPS cut. Earlier in 2025, the narrative was, cuts are guaranteed, liquidity is king, bull market forever. That narrative is now dead. Powell basically said, we're cautious, we're watching data, don't front-run us. Markets hate uncertainty more than bad news. Yes, the Fed announced 40 BTC T-bill purchases, repo, plus operations. Crypto Twitter instantly screamed, QE is back! Powell, relax, this is technical liquidity management. Translation in normal human language. This is not quantitative easing. This is not stimulus. This is not a money printer moment. Bitcoin doesn't explode on technical balance sheet maintenance. It explodes on real liquidity injections. No flood equals no fireworks. Here's the reality check. Unemployment rising, 4.4%. Job growth slowing. Inflation still above target, even if partly one-off. The Fed is not dovish. They are careful. They're managing risk, not igniting growth. This puts Bitcoin in a wait and range environment, not a breakout phase. Bitcoin only does face-melting moves when one of two things happens: dovish surprise, real liquidity shock, QE, stimulus, emergency cuts. This FOMC delivered neither. So what do we get instead? Ranging chop fake breakouts, liquidation hunting. BTC isn't bearish, it's just bored. The next real move comes when we see a clear policy pivot, or unexpected liquidity, or macro stress that forces the Fed's hand. Until then, patience, leverage. This is not the market to go full DIDN. This is the market to survive. So bottom line, this FOMC wasn't a trigger, it was a confirmation. Bitcoin didn't pump because there was nothing new. No surprise, no QE, no promises. If you're waiting for fireworks, they'll come, just not on a predictable calendar.